Actually, we'll leave that on. All right, fire. Did you guys get to watch the recording? Did the recording help? Did it make things cleaner, simpler? How was the recording? Did the recording help? Watched it 5 times. That's fire. It's very simple. Today's recording, you're gonna have to watch 5 times to really understand it. To really understand it to the perfection of how you should, right? You're gonna understand it today, but to understand it to the perfection of how you should, you're gonna have to watch it a couple of times. But yeah, yesterday was probably the easiest class. Today things get a little more advanced. Yeah, exactly. Yeah, thank you for reminding me, man. The homework. All right, perfect. So we left off yesterday on the homework. So the homework was, what is the Euro USD, Euro GBP doing, right? So are we bullish or are we bearish? So let's get started with this. Is this time frame bullish or bearish? Type 1 for bullish, type 2 for bearish. I feel like that would just be easier. 1 for bullish, 2 for bearish. Okay. I'd say about 90%. 90%. Yeah, about 90%, 85%, right? So let's see. We'll get our line right here and we'll just start from this point right here. And we'll just mark off all of these elbows, every point here that pretty much looks like a solid elbow, right? Whatever. We could have counted this one here, but it doesn't matter. So we'll come here. And then this is exactly this market right here. We're just moving it so we visualize it with the elbows, the structure. Do you guys understand? Type 1 if yes, type 2 if no. Perfect. So we're going to start off with this point right here. And then this point right here. We know this is the higher low. We know this is the higher high. So the moment we break above or under these lines, we then shift. Clearly, we broke here. So what does this point here turn into? I saw you. You said it, Jeffrey. I didn't hear you, but I saw you say it. All right. So exactly, this is the higher high. So if we have a higher high, what does that mean that we have? What is it? If we have a higher high, what do we have? Exactly. I see you. I see. Exactly. Higher low. So where does the higher low point go? Point 1, 2, or 3? 1, 2, or 3. Okay. Exactly. So it goes at point 2. So this would be the higher low right here. This is the higher high. As long as we remain above this, we're bullish. The moment we close under, we are bearish. So this is what is this point right here? Lower low, exactly. And where does the lower high point go? 1 or 2? 1 or 2? Simple, right? Easy. You guys see how easy it is to identify the structure now, right? Like, it's crazy. Now we know that the weekly time frame is bearish. That's it. That's literally all you had to do. Just look at those 2 lines and then that's it. So if you notice, this time frame right now is bearish. That's where we'll come here. Weekly time frame is bearish. Cool. We go to the daily time frame and we're going to do the same thing. Are we bullish or are we bearish? Some of you guys yesterday would have said this is lateral, consolidation, choppy, whatever. But the question I'm asking is the market structure. Type 1 for bullish, type 2 for bearish. Exactly. 100%. 100% of you guys got it. 100% of you guys got it. So if you notice, we could just start from this point right here. Right? Just to make it a lot easier. Obviously, we are bearish. You can tell this right here is the lower low. And then this point right here is the lower high. If you guys agree, type 1. If you guys don't, type 2. exactly. So this would be the lower high on the body of the move, lower high, and then this would be the lower low at this point right here, right? So we have the daily time frame bearish, looking good. You guys see how fast we get through these, right? I mean, this is how it's supposed to be. Like, you're gonna get to the point where you're gonna be able to tell. I'm talking about in like a second, because you just look at the market structure and you know, like, it's really not rocket science, right? Now, the 4-hour time frame. Are we bullish or are we bearish? Type 1 for bullish, type 2 for bearish. All right, all right, all right. So we're getting a 50-50 on this one. So 50% of you guys are correct. 50% of you guys are incorrect, which I am glad that is happening, because this is a beautiful example to explain it in right now. Right. So as of right now, I'm just going to draw it out exactly how I was doing it. Right. That's all I'm going to do right now. I'm just going to draw out the market structure. I'm just going to draw it out. Right. So I'm just going to get this right here and move it over here. My boy Caesar, he saw his mistake already. I saw it. You saw your mistake, bro. It's okay. Trust me. All right. So we're going to do the same thing. We're going to just start from this point right here. It's going to be the lower high. And then this is going to be the lower low right here, right? So we break under, this becomes the lower low, this becomes the lower high. If you guys agree, type 1. If you don't, type 2. There you go. Sebastian realized his mistake as well. So then we break under here, this moves as the lower low, and then this becomes the lower high. We body closed under the line, this becomes the lower low, and then this becomes the lower high. As of right now, we haven't had a body candlestick closure above this line right here. So we are technically still bearish. If in the next 19 minutes, that candlestick closes above, then that means that we will close like this. But until we don't body close above, we have not shifted the structure. I am telling you guys, this can play games with you day and night. Like, those wicks will mess with you. You're going to see it in trading. It's going to happen all the time. As of right now, this is the lower high, and then this is the lower low. If that body candlestick closes above in the next 18 minutes, then this now becomes the higher high, and then this becomes the higher low. Type 1 if you guys get it, type 2 if not. You guys are seeing how that makes sense, right? Like, I'm not making nothing up. I'm not making anything up, right? We're just sticking to the rules, right? It just counts when it closes above or under. Yes, exactly. Stick to the closed candlestick, right? So technically, as of right now, this is bearish. So this is perfect for an ideal swing trade, right? Whatever. That's because we have the majority of the time frames in sync. So the most logical thing would be obviously to sell, because we are bearish, right? So are we bullish or bearish? So we understand that we are clearly bearish. So now confluence number 2 that would come in is, where do we buy? Where do we buy or sell? Clearly, in this equation, we are only looking to sell because we are bearish. If you guys are with me so far, type 1. If you guys aren't, type 2. And yes, exactly correct. One of you guys said it. As of right now, this is a 30%, but it might shift, but it's okay. All right, cool. So now we're going to move on to number 2. Where do we buy and where do we sell? I'm telling you, you guys are about to trip out. This is the easiest shit ever. Once I show you guys, it's a wrap. I promise you, it's a wrap, right? Watch. I guess it's just so simple. Like, I don't know if I've said this, but it's like, you guys know that game, like, Where's Waldo? Like, for example, like, you know this thing where there's like a lot of like stuff on the, I mean, bro, I'm just gonna search it up. Where is Waldo? You come here, you see these things right here where like, oh, find Waldo, and as soon as you see Waldo, you can't unsee it. Like as soon as you find the goat, the cat, whatever, wherever he's at, you literally can't unsee it. It's literally the same exact thing, but with what I'm about to show you guys. Like once I show you, you can't unsee it, as crazy as it sounds, right? All right, so we understand that this market right here is bullish, correct? So this would be the higher high. Actually, let me just do it better. Let me just do this. Yeah, okay, like this. All right, so we understand that this market is bullish, correct? So this would be the higher high, and then this would be the higher low. If you guys agree, type 1. If you don't, type 2. Okay, so let's suppose this is the weekly or daily time frame, because we only look for area of interest on the weekly or daily time frames, correct? So we could only look for an area of interest on the weekly or daily time frame. If that makes sense, type 1. If it doesn't, type 2. Simple. Perfect, right? Okay, so when you're looking for an area of interest, you could only look for an area of interest within the higher high and higher low. Because if you look for an area of interest above the higher high, you're pretty much buying at resistance. If you look for an area of interest under the higher low, now the time frame is bearish. Let me give you guys a very simple example. For example, on USD JPY, right? So we're on the daily time frame, right? Let's mark this off as our higher high, and then let's mark this off as our, and let's mark this off as our higher low. If you guys agree, type 1. If you guys don't, type 2, right? So we could only look for zones to buy within this higher high and higher low, because what good does it do for you to have this zone down here and be like, oh yeah, this is a very nice area to buy because we have support, resistance, support. I'm like, yeah, you're right, it's a nice zone, but do you realize that if price gets there, this time frame is now bearish? You understand that, right? Or people will get onto the chart, be like, oh, this is a nice area where I want to buy out or sell. It doesn't matter. It's like, okay, hold on. You understand when price gets there, we're at a higher high and we're bullish. Like, how are you selling when the structure is bullish? So when you're looking for your area of interest, you could only look for your area of interest within the higher high and the higher low, because you expect to have a retracement somewhere in this zone before it breaks under to then go to the upside. If that makes sense, type 1. If it doesn't, type 2. It's so simple. Like, it's crazy. That's why I'm telling you guys, if you guys understand yesterday's class, marking off area of interest is going to be the easiest thing ever. That's why I literally only have like one line at a time ever on my chart, right? So let's go back to over here. Okay, perfect. So this is currently a bullish time frame. Let's just put 1. Let's just put, it doesn't matter, right? It really doesn't matter. Weekly, it really doesn't matter. So we understand that this is the higher high, and we understand that this is the higher low. All we're trying to figure out is, when is this pullback going to stop so I could get in the buys? That's all we're trying to figure out. That is the secret. That is the magic. That is the whatever. This is all we're trying to figure out. When is it going to stop so I could get in and make money? That's it. That's all we care about, right? But a lot of traders, they want to get this and then they want to get this. So we already understand that we can't get this. We can't take a sell because we're going against the trend. So we already eliminate taking hella losses going against the trend and just not taking a high probability setup. If that makes sense, type 1. If it doesn't, type 2. Right? One thing at a time. So if we understand we can't take this sell because we're going against the trend, that sell or that pullback is our friend, because we want that pullback to happen wherever it happens, because where it gets to the spot, then it's going to give us our next push to the upside, right? But that pullback, where is it going to stop so we get the buy? Well, that's the whole point of the area of interest. Where is it going to stop so we go to the upside? So the area of interest is the easiest thing on the face of the earth to mark off. So in order for you to have an area of interest, you need to have a minimum of 3 touches to mark it off as a area of interest. So in order for you to mark off a zone as an area of interest, it needs to have a minimum of 3 touches, whether it is support or resistance, or just needs to have a minimum of 3 touches, everything to the bodies, right? So let me actually just draw a little bit more market structure over here. Right, so let's just suppose like all of this is market structure, right? So our goal is when this price starts pulling back, find a spot that has a minimum of 3 touches, because this is a potential area where price can then have a pullback, a push to the upside. So we would mark this off as area of interest 1, daily or weekly area of interest 1, because this is the first area when price starts pulling back, if it starts pulling back, where it could then have a push to the upside. So what we do is, before any of that, before this pullback starts happening, we get our trusty zone, our trusty box, and we start going from the highest point, from the higher high, and we start bringing it down, bringing it down. Whenever we find the spot that has 3 touches, for example here, 1, 2, 3, this is considered an area of interest. If that makes sense, type 1. If it doesn't, type 2. Easy, right? Simple. So we're doing all of this and on the high, like literally on the higher high. So we understand this is area of interest 1. Cool. We keep going. We keep coming down. Do we mark this off as an area of interest? Type 1 if yes, type 2 if no. Correct. There is no structure. There's no 3 touches. There's no elbows here. There's nothing, right? You need to have a minimum of 3 touches. So we get our zone. We start bringing it down. We keep going down. Boom. Then we run into this zone. We have 1, 2, 3, 4 touches. So this can be another area of interest. And this is where we just want to create a little zone. I already know I'm going to get this question asked. How big should the zone be? That's something we'll touch upon when we get into the charts. So we would consider this daily area of interest 2. And then we keep bringing the zone down, keep going down. And if you notice, there's no structure anywhere else in here. So this trade currently only has 2 areas of interest. This is the first area where price can have a pullback to then head to the upside. And then this can be the other zone where price can then have a pullback to then head to the upside. Now, I don't have a preferred area of interest. I don't want it to come here and then go up, or I only take trades at area of interest 1, or I only take trades at area of interest 2. That is not the case. I take the trade wherever my strategy applies. So as of right now, we're not using my strategy at all. My strategy applies once price gets to the zone. Once it gets inside this zone, that's when I apply my strategy. So once the price comes here, if my strategy doesn't align, I don't take the trade. Or if it does, I take it. If it hits my stop loss, cool. I wait for it to get to the next area of interest. If the strategy aligns, I take the trade, and that's it. I don't look to sell from this area to this area or buy from this area to this area. I just wait for price to have a pullback to one or like either one of these zones. I wait for my strategy to check off, and then I take the trade, and then I set and forget. Like, that's really it. It's really that simple. So what I do is I get here in my zone. I put an alarm here. I go to my notes. I put here daily area of interest 1. So once price gets there, I already know where area of interest 1. That's when I actually start looking at it. And then I come here, and then I'll put daily area of interest 2. And then I'll start marking this off as my daily area of interest 2. And I'll just wait for it. If that makes sense, type 1. If it doesn't, type 2. It is very, 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 very simple. Like, trust me. It's like I told you guys, like where's Waldo? Like, once you see it, you can't unsee it. Do I also use the higher low as an area of interest? All right, great question. So I'm getting asked this. I just like copying it because one thing is like me saying it. Another thing is also like you guys reading it. All right, so I'm getting asked this. Do you also use the higher low as an area of interest for a pullback? And then the answer to this is if there is 3 touches. For example, here, there's only 1, 2. There's no 3 touches here. So if this point were to have been right here, yes, we could consider this to be an area of interest 3 because we are still above the higher low and there is 3 touches. If that makes sense, type 1. If it doesn't, type 2. Correct. All of this, bro, does fake outs affect validity? I don't know, man. This is just the bodies of the candlesticks. Fake outs are gonna happen. I just look for the touches. Like, for example, I guess you can call this a fake out. It doesn't affect the trade because there's other points that make up the 3 points. So I wouldn't say there's like if you want to call this a fake out, I guess it is what it is, but there's 3 points here that mark this off as an area of interest. Like, it's never gonna always be every touch. Like, there's obviously gonna be price that breaks through. You're just building up a series of zones. Like, all we're trying to do here is figure out where it has the highest probability of going up from. Is it going to go up from here, or is it going to go up from here? Or it can have a pullback and it can go up from right here for no reason. And there's nothing you can do about it. There's nothing you can change. There's nothing you can adjust. It just didn't come to your area of interest. And then that's it. Like, you guys, I've avoided more losses than taking trades outside of my area of interest. So there's been a shit ton of trades that have not made it to my area of interest by 10 pips. And then I'm talking about they skyrocket for 2 months. But there's times where it makes it to the area of interest and everything checks off and it does the same. So I'm not going to change my strategy based off if it gets to the area of interest or not. I just wait for it there. Do you guys have any questions so far regarding this? I promise you guys, this is really that simple. Do we also count the wicks to be touched? This is all the bodies. We're just strictly using the bodies. How do we identify the size of the area of interest? I'll break that down once we get to the charts. I just want you guys to understand like the overall flow of it. Can you list the steps with numbers, use sell or head or shoulder pattern? I have no idea what you're saying, man. How can we identify the size? I already answered that. Does it mean that if price goes to area of interest 3, isn't it more probable that it's changing its direction? Not necessarily, not at all. Because price can still have a pullback all the way into here and then still have a new higher high. Like, that's what I was explaining yesterday. As long as we don't body close under, this market structure is still bullish, 100%. So I don't care where it goes as long as it hits my area of interest and my strategy checks off. That's it. I don't care what zone it is. I don't care. How many areas of interest? This is a question that I get very often, and it's very simple, right? It's very self-explanatory. Hold on, I'm just copying it. How many areas of interest? How many does the market give you? In this case, they only give us 2. Like, that's it. You know, we can't do nothing. Like, I can't make up areas of interest. That's why I told you guys yesterday. There's only you only have to go back about a year or 2. Because if you go back 10 years, and you're gonna have 100 lines in here. You're gonna look like this. You're gonna look like those guys that are order block traders or whatever the fuck they are. They have like a shit ton of lines like this. I don't even know which one I copied. You're gonna have your line, and this just looks crazy. This just makes no sense to me. At the end of the day, price is going to be reflected off of the most recent price. So we just use the most recent price. So how many areas of interest? How many does the market give you? Those areas of interest are just drawn on the weekly or the daily. I'm not going to answer that because it's right here. When price did not fully reach the level but touched USD CAD. We're not on USD CAD right now. I don't even remember the last time I traded USD CAD. Um, what if we take 2 losses? Do we still buy at the third? 100%. Let me see what. So the best analogy that I can put is, let's say you're surfing and you fall off the first 2 waves. When the third wave comes, you're not gonna get on it. No shit, you gotta get on the third wave. That's why you're there. It's the same thing here. Like, that's why we have the area of interest. Like, if we take a loss here, cool, we wait for the next wave. If we fall off here, cool, we wait for a year. And if we fall off here, then we go to another one. Like, it's really that simple, you know? We can't change anything. And we're not going to sell now. Like, if this breaks this zone, you can't then sell to this zone, because now you're just not even, like, it just doesn't even make sense. What's the size of the box in pips? That's what I'm going to answer when we get to the charts. Where do you keep stop loss under area of interest? So the stop loss is going to be with entry signal, which we're going to do tomorrow. So don't worry about that. That'll be tomorrow. The weekly area of interest better than the daily, right? It's more probable because obviously you have like the higher time frame, but it's kind of the same thing. I mean, they both have different purposes, right? That's what I'm going to get into now. Can you show the area of interest on the charts? Yeah, no worries. So do we all, I mean, I just want to make sure you guys like understand everything, right? So if you guys understand type 1, if you don't, this is your moment to ask your question before we move on. Sometimes their momentum is good. All right, perfect. Easy, right? So if you notice, if we go back to this trade right here, this is your GBP. This is what we just analyzed. By the way, everything we just did right now, it's the same thing, but for sales. It's literally the same exact thing. All I did was just flip the chart, right? But for this example's purposes, I'm going to flip the chart because we were doing buys. So I'm going to flip the chart here. So it's just easier to understand because we were doing the example on buys, right? So if you notice, this would be the higher high. This would be the higher high. And then if this is the higher high, the higher low would be here. If you guys agree, type 1. If you guys don't, type 2. Right? So if we use the same method that we just did, we would get our zone like this. We'll get our zone. We'll zone it off. And then we will throw it to the left. You don't have to go more than a year or 2, right? This is plenty of space. So if you realize, if we start getting this same zone and we start bringing it down, bringing it down, bringing it down, would you guys consider this an area of interest? Let me go a little bit more left. Type 1 if yes, type 2 if no. Can be a little bit tricky. Can be a little bit tricky. I don't blame you guys. Exactly. So there's not really any clean elbow touches. There's no real nice market structure there, right? It could be a little bit tricky. It could, throw you off a little bit. I personally wouldn't, right? You keep it coming down, keep it coming down, keep it coming down. If you notice, we have this point right here. Would you guys consider this a point as an area of interest for market to have a pullback and then balance to the upside? Type 1 if yes, type 2 if no. It can be a little tricky. Okay, we'll keep going. So if you notice here, we have wicks, but we're not using wicks. We're using bodies. Bodies, we only have 1, kind of 2, and then 3, but it doesn't look like, it needs to look clean, right? So we just keep it going. We just keep it going. We keep it going, keep it going, keep it going. If you notice right here, this looks a lot better. So we have 1, we have 2, kind of 3, kind of 4, kind of 5, right? So if you notice, we would mark this off as an area of interest 1. So this comes to answer your question of how big is the zone? How big is this box, right? So the goal of the zone is you want to get as much bodies as possible, right? You can't get all of the wicks. You can't get the wicks. The wicks don't do shit for us. We need the bodies, right? So if you notice, the top of this box is going to be at this body. It's going to be this body, and then kind of this body. And the bottom of the box is going to be at the top of this body, and it engulfs this body. If that makes sense, type 1. If it doesn't, type 2. So if you guys have any questions, please, this is your moment to do it. So I'm going to circle off the 3 points that make this an area of interest. All of these are structure points. All of these are elbows. You notice right here, these are all of the elbows right here. It's at a higher high, even if the candlestick hasn't closed. Can you please tell the box again? I'll get to the box now, and we'll do multiple examples. Don't worry. Didn't get the point of the box though. So the point of the box is because obviously we understand that price is not ever going to perfectly come to like a zone. I mean, never going to perfectly come to a line. Like price is never going to hit this perfectly, then break it and then come back and retest it like perfectly. Like it's never going to do this like perfect stuff, right? So the point of the zone is that it just gives you a little bit more breathing room. It just gives it more room. So like if it doesn't hit the top of the zone, it could still do this and it still counts because it's still the area of interest. You guys see that, right? Does that make sense? Type 1 if yes, type 2 if no. So ideally, I can make this super skinny like this. I can make it a line. Like I can literally just make it like that. But if I make it into a zone, I get the market structure. Like I fit in all of these structure points inside there. Why is your chart upside down? I said it. It's because I'm explaining the buy because this position right now is in a sell. But the example that I was showing you was in a buy. So I just want to keep it to the example that I was showing you, right? So this right here would be daily area of interest 1. So we expect for price to come back into here to then go to the upside, right? So then we keep the zone going. So this is where we'll get another zone and we'll put it at the bottom. Literally the same thing, but we don't start from the top, right? We start off from where we left. If we keep coming down, keep coming down, keep coming down, obviously it's kind of a, cheat code. You guys see my zone there. So obviously this is an area of interest. If you notice, we have 1, 2, 3, and 4 and 5 structure points, making this an area of interest. If that makes sense, type 1. If it doesn't, please type 2. Simple, right? If you have any questions, this is your moment to ask it. I'm marking off the structure points that make it an area of interest. We got this one, and then we got this one. So if you notice, we got the box right at that body right there, and we move the box up to get this body right here. So it's not ideal to make all of this one zone because it's just kind of like crazy, right? You don't know what like what the fuck is going on. Like it's just too big, right? And I can never measure it by pips because when you measure it by pips, every pair is different. For example, right now in Euro GBP, it's 36 pips. When you look at that on GJ or UJ or NAS, it's not going to look a lot, right? Because I mean, it's going to look like a lot more because those pairs have a lot of movement. So on Euro GBP, it's not much, but this pair doesn't move much. So it kind of correlates, right? You can't base it off of a number of pips because every pair is different. So we would mark this off as area of interest 2. So daily area of interest 2. So we have all of these are our structure points. Just so you guys get some context, so you guys get an idea. I'm just going to do this, right? We're going to obviously skip a lot of structure. Just so you guys see it how I've been showing you. All right, so this movement right here is the market we just did right now, right? It's literally the exact market we were doing. So if you notice, this is the higher high. And then this is the higher low. So if you notice, we marked off this zone right here. The zone right here. So we got 1, 2, 3, 4, 5, 6, or 5, 6, whatever. You guys see it, right? Does that make sense? Type 1 if yes, type 2 if no. Exactly. Okay, perfect. So simple. It's just very easy to see it like in the lines, but I got to show you guys in the candlestick because we're trading candlesticks, not charts, right? Would it be easier to use the line chart? Not really, because in the line chart, you could see more structure than you're supposed to be. Like if you notice, there's so much more structure like this. I mean, you can do it to kind of like adjust your zone. For example, here, if you notice, like I can make the zone a little bit higher. So I touch that body right there. You see what I mean? I can get it right there. So I touch that structure point. This one's already on the money. We got this one. We got this one. But we're trading candlesticks. So you got to be looking at the structure on the candlestick. So should we use the line chart? I guess you could use it at the beginning, but I would stick to the candles because we're trading candlesticks, right? So then the more points, the better. Yeah. So if the area of interest has more touches, obviously it's more respected. So it can be more of a favorable zone. But it doesn't make a difference, you know, but yes, it's more favorable, right? So we keep the zone going, we keep coming down, we keep coming down, keep coming down, keep coming down. And then we got this one, right? So here we have one, nothing, 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 kind of two. So no, it's got to like scream out your name, right? So we got here kind of 1, 2, 3, 4. So we can make this a little zone right here. You see? If you notice, we can even make it a little bit thicker. So we got 1, 2, 3, and then 4. We're all this right here. So this could be another area of interest. And then if we were to just keep going with this from this point down, can we use the higher low as an area of interest? 1, 2, 3, and then 4. You guys are seeing that, right? You guys are seeing how we can use the higher low as an area of interest. Again, I'm not making none of this stuff up. I did not make this market structure, because if I did make this market, I would be somewhere else right now. I would probably be like on I don't even know. So kind of here, we got over here. 1, 2, 3, 4, and then 5 touches. If everything makes sense, type 1. If it doesn't, type 2. We should consider our area of interest just one clear zone. Yes, it's just one zone. Correct. So these are all points where we are expecting the market to have a pullback, head to the upside, pullback, head to the upside, pullback, head to the upside, pullback, head to the upside. So these are the 4 points where you want to apply the strategy that I will be teaching you guys tomorrow, right? But I need you guys to understand that at every single one of these points, there's more of a series of things that we look for. Like it's just not the area of interest. Like there's more things, right? That's going to be the next thing we're going to touch up right now. But I just want to make sure you guys understand this clearly. You are only looking to buy in the higher high and in the higher low. You can't come in here and then say, yo, this is my area of interest 5 or whatever. Because if this is your area of interest 5, once price gets there, we are now bearish. If that everything makes sense, type 1. If it doesn't, type 2. Fire. Perfect. 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 Simple, right? How we doing so far? Easy. You guys are seeing how easy it is, how simple I find these zones. Like it's not rocket science. Like I'm literally just using the market, right? So let's flip this. Super simple. Perfect, right? All right. So we're going to have a little quick recap. And then after this, if you're looking for possible, so you're looking for possible higher lows, of course. Oh, I mean, I guess I have to write this down because I mean, if you are looking to buy, you must buy at a higher low. So, I mean, this is very simple, and this is probably so overlooked. If you're looking to buy, you must buy at a higher low. If you're looking to sell, you sell at a lower high. I mean, that's not like rocket science, right? Like if you're buying, you can't buy up here. You can't buy at the higher high. You got to wait for the higher low or potential higher low, and then you wait for the upside. If you're looking to sell, you sell on the potential lower high to head to the downside. If that makes sense, type 1. If it doesn't, type 2. Simple, right? Okay, perfect. So covered everything to this point. So let's just do an example and then we'll see how you guys are. Let me just delete these alarms. All right. All right, are we bullish or are we bearish? Why are you laughing, Dom? Why are you laughing? No, I know, it's funny. You see me spamming the fuck out of this button? Exactly, correct. We are bullish. So this is what you guys at the beginning would have said: consolidation, bearish, bullish, start, right? So we understand that now we are bullish. So we understand this is now the higher high. We understand this is now the higher high. And then this is now the, let me just move over here. Now this is the higher low, right? So looking at this mess just got a whole lot easier because we understand that we don't care about the mess. We just care about this right here. This is all that we care about. Pretty much everything outside of this zone, like all of this gets canceled out to a certain extent, and all of this gets canceled out to a certain extent. To our area of interest, this is all we're looking for. If you guys understand type 1, if you guys don't, type 2. Correct. All right, perfect. So now we start having our pullback. So we start looking for an area of interest. Is this an area of interest? We got 1, 2, and let's just not count that as 3. So no, that is not an area of interest. So we keep going. Here we got 1, 2, and then 3. So we count this as an area of interest. Type 1 if yes, type 2 if no. Okay, so we'll count this as area of interest. So to answer your question, how big should the zone be? Well, if you can manage to get this touch in there by just bringing the zone down a little bit, that's how big your zone should be. But don't make it too big so you get this one. Because then if you want to get this one, but like, fuck it, let's get this one right here. So then you make it a little bit bigger and then you get this one. But like, you know what? Let's make it a little bit bigger. So then we get this point right here. And then you just fucked it all up. You know what I mean? Like, you got to stay real to like the specific area. Type 1 if that makes sense. Type 2 if it doesn't. Like, you got to be real to yourself. Like, hey, like, shit, it only makes sense like if we just bring it down to that 1 point right there. We already got 3 touches. We already got 1, 2, 3, and now 4. That's it. We don't really need more. Like the zone, the tighter the better, right? So we keep going. So we'll mark this off at the bottom, and then we keep going through the zone. Right, we got right here. Let's just say we got, I don't know, we got 1, kind of 2, 3. So let's just say, just for this example, we'll keep going. We keep going. So we got 1, 2, 3, 4 spots as an area of interest. So this would then be area of interest 2. If you notice, instead of making it so tight like that, if I bring the box down a little bit, I get this point right here. And then if I bring down the box a little bit, I get this zone right here. So by me bringing the box down, I just tap this one and then this one. So this would be area of interest 2. And then we'll just do it again until we reach all the way to the higher low. Here we got 1, 2, 3, and then 4. So we just make this area of interest 4 because we got 1, 2, 3, 4. And then the higher low, is it an area of interest? I don't know. Let's find out. The higher low, we got nothing. You can never make the zone of the higher low under the higher low. You guys already know why, because that means we'll shift to bearish. That's why it has to be from the higher low point up. So for this example, we can't make this zone a little bit lower to grab these points right here. Because then if that does that, then we're breaking under the higher low. So if it breaks under the higher low, that means we're now bearish. If everything makes sense, type 1. If it doesn't, type 2. Simple, right? Easy. Where's Waldo? He's right there, right? Easy money, right? All right. So if you guys have any questions, this is the moment to ask it, because now we're about to enter the next thing, which is a little confusing, but I'm going to make it very simple. What happens when you have two areas of interest close to each other? Would you wait for price to go into the middle of both of it? You just wait for price to get to whichever one and you wait for it there. You don't wait for it in the middle. You gotta wait for the area of interest. It's higher, 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 low, even if the candle hasn't closed. Yeah, no, this is obviously the candlestick closure. Like it's you're not doing this on the wicks. You gotta wait for the candlestick closure. For example, let's go back to this one, right? This one on the 4 hour, we were looking at it. So now this candlestick has closed above. So now this time frame is bullish. That's it. Simple. Areas of interest are only found in the daily and the weekly time frame. You might be trolling me, bro, but I'm gonna answer your question. Your question gets answered right here. How do you decide if start looking for area of interest on the daily or the weekly? Do you look at both? I'll explain that order now. I just need you to understand how to properly understand it. I don't understand the size of the zone. I think I've explained it quite well. Once you see the recording, it'll make sense. Because I'm sure it's like a lot to intake at once. So round psychological numbers not related to this. That's what we're going to get into next. Just want to get through this first. You're lagging, or is it me? I think it's you. You guys hear me good, right? Yeah. Yeah, I think it might be your Wi-Fi. All right, perfect. So we all understand. We're ready to move on. Type 1 if yes, type 2 if no. All right, perfect. Shit's about to get crazy right now, I'm telling you. All right, so as of right now, just for this example, right, let's just do this. Let's just say this trade, right? We're just, again, this is just all just like putting down stuff because I need you guys to just understand the structure. All right, so 1, we are bullish. And then 2, where are we buying? Are we buying at a weekly or daily area of interest? I don't know. So this is where you go out to. And let's say, let me actually just show you guys on a live example, right? So let me actually show you guys on, let me find one that's a buy. It's crazy, bro, because I can just see these things like right off the bat. Right, so we got this one and okay, I guess, right? So let's just suppose that this time frame is bullish, right? Obviously, this time frame is actually bearish, but let's just suppose like it is bullish. If you guys understand type 1, if you guys don't, type 2. We're just pretending that it is bullish, right? This is strictly just to show an example. I don't want you guys to get confused. So let's just suppose that this is the higher high, and then let's suppose that this is the higher low, right? This is the weekly time frame. So we understand, we already know that the weekly is bullish. We already know that the daily is bullish, and we already know that the 4 hour is whatever, right? The 4 hour doesn't matter because we have 2 time frames in sync, and we only look for these 2 time frames to get an area of interest, right? So if we understand that this is bullish, we're looking for buys, meaning we're looking for a pullback to wherever to then take the trade to the upside, right? You guys understand type 1? If you guys don't, type 2. Okay. So if you guys notice this right here, it's already marked off, right? Like I said, cheat sheet, right? But whatever, we would get our zone. We would put it at the top of the higher high. We put it at the bottom of the higher low. And then we would just start pulling back the zone, waiting for price to have a pullback to whatever area of interest. And boom, we run into this right here where we have body 1, 2, and then 3. So we would mark this off as area of interest 1. If that makes sense, type 1. If it doesn't, type 2. Right? So if we keep the zone coming down, we kind of have here like 1, kind of like not really. And if this was 2, it's still not 3 touches, not an area of interest, right? We keep going. This is nothing. We keep going. The higher low can be an area of interest because we got 1, 2, and then let's just count this as 3, right? But whatever. We're not going to put this because this for this example is not relevant, right? But this would be area of interest 1 on the weekly, right? I mean 2 on the weekly, right? But for this example, it's not relevant. So we understand for the weekly, we got to come back here to then buy, right? So this is where we go down to the daily because we are looking for areas of interest on both time frames if we have the both of them bullish. If we were to have this one bearish and then this one bullish, we are only looking for an area of interest on the daily. That's it. Because you can't look for an area of interest to buy if the weekly is selling. Does that make sense? I'm going to say it again, right? So as of right now, we are looking for a weekly area of interest because the weekly is bullish. Shit. Because the weekly is bullish. So we're going to look for an area of interest on the weekly and the daily to see if we could get both of them to align and make one solid area. But if we don't have the weekly with it, then we only look for an area of interest on the daily because we only look for areas of interest on the weekly or the daily. If that makes sense, type 1. If it doesn't, type 2. Okay. Simple, right? So for this example, that is the area of interest on the weekly. If you notice right here, we can mark this off as the higher low on the daily and this as the higher high on the daily, right? You guys understand that? You guys see that? Simple. So we're going to get our zone, do the same thing, and then we're going to look for an area of interest. So we're going to start coming down, coming down, coming down. This one right here. Let's go like back like this much more. As of right now, 1, 2, not really, nothing. We keep coming down. We got 1 point, nothing. We keep coming down, kinda 1, not really, 2, nothing. We keep coming down, and what do we got? We got 1, we got kind of this 2, and then we got 3. So we would mark this off as also a daily area of interest. So this zone right here just got double juicy, better, triple topping, whatever. You guys know what I mean, right? So it looks fire. So we have the weekly and the daily as an area of interest 1. We keep coming down, keep coming down, keep coming down. We kind of have 1, kind of 2, 3, 4. So this is another area of interest right here. You guys notice the size of the box is based on how many bodies do I grab. I grabbed 1 body right here, 2 bodies, move it down just a little bit to get 3 bodies, 4 bodies, 5 bodies. That's it. All we need is 3. We don't need more than that. So this is area of interest 2 on the daily. We get our zone again from this point right here, put it at the higher low, keep it coming down, keep it coming down. We kind of have 1 and 2, and that's it, nothing. Keep coming down. We kind of got 1, 2, 3-ish. Not the cleanest is a little choppy in here. Keep it coming down. If we want to squeeze this structure point right here. So this structure point, we got 1, not really, 2, 3, 4, 5. So this right here is another area of interest. We just put the zone a little bit up. So we grab all of these bodies right here. If that makes sense, type 1. If it doesn't, type 2. Right? Simple, clean, bet. We keep it going. What did I just do? We got to put this here, right? So we're coming from this point, Keep it going, keep it going, keep it going. We got 1, 2, 3, area of interest 4. So this would make it a little bigger. So we grab this point right here. And then that would be our last area of interest. So you guys see how there is never the same amounts of area of interest. Is there more on the daily? Is there more on the weekly? I have no idea. It's whatever the market gives us, right? It's whatever the market shows us to be an area of interest. So as of right now, we are waiting for price to have a pullback to area of interest 1, area of interest 2, 3, or 4 till we head to the upside, right? So let's just suppose that price pulls back to area of interest 1, right? So this is where we would come here. We would type this up. We would put this is confluence number 1. We already know it's 30%, right? Let's just suppose. We're just going off simple stuff here. And then confluence 2. We have to start from the highest point down, right? The highest point meaning weekly. So let's just say we are here, right? Let's say price is at this point right here. Where we at? We are at weekly area of interest and daily area of interest. Well, fuck, we got to write that down. At weekly area of interest, 1, 3. At daily area of interest, 1. Let's say for whatever reason, the rest of the confluences don't line up. We don't take the trade and price comes here. All right, cool. We'll come here and then we just delete it. So now we only have, we're at only a daily area of interest. If that makes sense, type 1. If it doesn't, type 2. It's simple. Like it's literally telling it for you. We're not doing anything. We're just copying what the market is telling us, right? So as of right now, every area of interest is a 10% towards the gray. So now before we get into that stuff, I'm gonna, where's it at? I have it, it's not here. Where do I have it? Okay. Is it this one? Where is it at? Okay. All right, so you guys, wait, before anything, you guys understood all of that stuff, right? If it made sense, type 1. If it doesn't, type 2. If you have a question, this is your moment to ask it. How many areas of interest do you need to have? I think you're trolling me, bro. There's no way, man. Like, I'm just gonna show you guys because this is not real. I'm telling you, somebody really asked me that. I'm just gonna say, watch the recording. Is it better to have an area of interest on the weekly or the daily? Whichever one. They're both 10%. All right, perfect. Cool. So if you guys are ready to move on, type 1. If you guys aren't, type 2. Perfect. Everybody with 1s. Beautiful. Right? All right. So what I want you guys to understand is that after the area of interest comes a series of confluences that I didn't make up, that the market gives you as well, right? So after we understand that we are at our area of interest, I then have a series of checklists that I look for confluences to add to my trade. So I look to add to my trade whether we are touching the EMA, whether we have a candlestick rejection from previous structure point, around psychological level. So this might be like a lot to intake right now, but you guys are going to see how easy this shit is, bro. It's so simple. It's kind of annoying, right? Like it's kind of annoying that it wasn't taught before, or it's going to be so simple, right? So as of right now, we're going to bring the same confluences that we just had, which was this right here. Where'd it go? Was it this one? Okay, yeah. So as of right now, let's just pretend this, right? We understand that we cannot be looking at a trade unless we have a minimum of 2 time frames in sync. After we understand that we are looking at a trade that we have 2 time frames in sync, then comes, where are we at? We are at our area of interest. Then after our area of interest, now is when we start applying the entry of my strategy. It's only like the beginning of it. So if you guys are ready to move on, type 1. You guys aren't, type 2. You guys are seeing how I couldn't teach you what I'm about to teach you from this point on without knowing all the other stuff, right? Because it's like nobody's reading the market the right way. It's crazy. right? All right, perfect. So now that we understand that we are at our area of interest, now comes my next series of confluences, right? Which is going to be 3, 4, 5, and then 6, right? So these are all very self-explanatory. So these confluences I'm doing from the weekly, daily, and then 4-hour, right? So this, I'm doing it from the higher down. If we have the weekly bearish, we're obviously already removing that out of the equation. Like it's just pretty simple, right? It's like there's no explanation needed to be there, right? So all of these confluences have obviously a percentage towards your grade. Touching EMA is 5, candlestick rejection is 10, structure point is 10%, and then round psychological is 5%, right? So as of right now, this trade right here from the following confluences, what can you say that you can mark off, right? So let's just walk through it very simply. Are we at an area of interest? Well, I don't know. Let's see. Is this an area of interest? We have 1, 2, and then 3. Is that considered an area of interest? Type 1 if yes, type 2 if no. Okay, correct. So this checks off. Are we touching the EMA? Type 1 if yes, type 2 if no. Well, I don't know. So we'll get this. We'll see. Are we touching the EMA? This is the EMA right here. So no, we are not touching the EMA. This gets removed. Candlestick rejection. Do we have any candlestick rejection? So let's just pretend like this is a doji candlestick right here. Let's just pretend like this is a doji or rejection candle, whatever. Let's just pretend like these are doji candlesticks. So for that case, this would be a yes, because we have a candlestick rejection at our area of interest. If that makes sense, type 1. If it doesn't, type 2. And we are doing this on every time frame that from high to low. So if we're on the daily, we check the daily candlesticks and all of these points right here. If that makes sense, type 1. If it doesn't, type 2. It's going to make a lot of sense very shortly, right? So we have the daily candlestick rejection. So this is a check. Do we have a rejection from a previous structure point? So before I explain this, I'm going to have you guys explain it to yourselves, because this is something that has been very confused in the past, right? So what is this point right here? Correct. This is the previous higher high, right? What does that mean? That it's the previous structure point, right? So this is considered the previous structure point. Sometimes we have areas of interest that are above the previous structure point or at the previous structure point. If you notice, the most ideal textbook trades that always happen is when the pullback goes to the previous structure point, retest the previous structure point, retest the previous structure point. If you guys agree, type 1. If you don't, type 2. Right? Very simple. But sometimes it doesn't. Sometimes it can have the push from above the previous structure point, and there's nothing wrong with that. Like there's nothing we can do with that. It is what it is. But when price has a rejection from the previous structure point, it's added as a confluence, right? So for this example right here, are we at the previous structure point? Type 1 if yes, type 2 if no. Are we at the previous structure point? So I actually confused you guys. This is not the previous structure point. This is the previous structure point. You guys are seeing how this was the last point before we created this new higher high. So this right now is not the previous structure point. This is not the previous structure point. The last previous structure point would be this point right here. So for these examples right here, this would be the previous structure point to this one. This would be the previous structure point to this one. This would be the previous structure point to this one. If that makes sense, type 1. If it doesn't, type 2. You guys are seeing how it's so simple, right? It's like right in front of us. Like I'm not making none of this shit up, right? So this is where we come here, we add candlestick rejection because it's there. Are we at a previous structure point? No, we are not at a previous structure point. And do we have a round psychological level? So I want you guys to pay attention because this is the hardest thing how to identify, right? I'm totally kidding. It's actually the easiest thing to do. So the round psychological level, it is very simple. Once you have your area of interest, all you got to do is get this line and you throw it in the middle. Like you don't even look. You just throw it right in the middle of the zone. You don't care. Throw it right into the middle or wherever inside the area of interest. You double click it. Once you double click it, you just find the nearest 500. So if you notice right here, you're to delete it. 70, 500. We have a round psychological level inside our area of interest. That's it. It's really that simple. If the round psychological level, for example, let's say or to be this one, 1.800, that doesn't count because it's not inside the area of interest. Or if it were to be 1.700 under the area of interest, doesn't count. We don't have an area of interest. So it is every 500. If you notice, oh shit, like this, 179, I mean 1.0, 500, we have it right inside the area of interest. If that makes sense, type 1. If it doesn't, type 2. You see how simple that is, right? Like the round psychological level is like, bro, it's so kick. So do we have a round psychological level from this trade? Type 1 if yes, type 2 if no. Exactly. So right now we would have round psych level. So as of right now, if we were to add all of these confluences up, just basing it off of the daily time frame, this would be 10%. This would be 10%. And then this would be 5%. So with just these confluences right here, we have a 30, 40, 50, 55%. So I don't know where you guys are based in the world, but where I grew up when Miami, a 55% on a test in school, this is still an F, right? In my opinion, this is what I got all the time. So this is fine, right? But obviously your goal when it comes to money is you want to get the nearest to 100%, 100% being an A, 90% being a B, so on and so forth, right? I'm just going to make this because it has happened before. And because I guess everybody's like every school is different in every country. I don't know where you guys are from. 70% is a C, 80% is a B, 90% up is an A. If you guys understand this, type 1. If you guys don't, type 2. Okay, I see some 2. Do you guys see how clear this is, right? How simple this is? Like none of this shit's rocket science. Like there's nothing here like I found in a secret or anything. Everything is like to the point. So as of right now, we have a 55%, meaning that this grade is still an F. So this, I mean, it just comes down to your risk tolerance. Like, is this something that you want to take? Is this something that you don't want to take? It just comes down to what do you want to do? And obviously, you don't want to risk your money on an F grade, right? Like, put yourself in the position of a professor. Like, would you pass a student with an F to go do a surgery on somebody? Probably not, right? That's why the people that fail don't pass. So it's the same thing in the markets. You shouldn't let a trade that's an F pass to trade your money. Like that makes no sense. So if you guys understand so far, type 1. If you guys don't, type 2. Does a round psychological level work on any pair? If the pair has numbers, yes. Isn't the trend 20%? My bad, bro. You guys got me, dude. Yes. So even worse, this shit's a 45%. I don't even think I ever got this slow. Okay. So the round is always at every 500. Yes. Because it's just every, I mean, that's just how I learned and that's how I've been using it. So it's every 500. An example, the round psychological level. Sure. All right. So we marked off all these zones together, right? So we're just going to get a line, throw it into the middle of the zone. And then once we get in the middle of the zone, we're going to double click it. We're going to find every 500. So this would be 62.5. No. Then it would be 63, right at the top at the area of interest, valid. Moving on, that is it. Next zone, to put it right in the middle, every 500, 62.5, valid, right at the bottom of the zone. We keep it going right here in the middle. We just put 162 right at the top, not ideal. 161.5, not doesn't work, but it works for this area of interest. Like that's just really how it is. And then what a coincidence that your area of interest is right at around psychological level. Like you guys are seeing how everything starts like gearing together and like making more and more sense. Like these zones aren't a coincidence. This has a purpose. This has a reasoning behind it. So if you guys understand type 1, if you guys don't, type 2. 1 second, guys. I'm just gonna take this 1 second. All right, I'm back. My bad, guys. All right, so if you guys understand everything so far, type 1. If you guys don't, type 2. Could you explain the 50, 60, 70? Sure, yeah. So you're probably in a country where like the grading system is not the same. I think it was here, right? Which one was I doing the example on? Was it this one? Okay, that's right here. Yeah, bro, I can't be having all this crazy stuff here. It's just too much stuff. All right, so yeah, basically the grading system, how it goes in the high schools or colleges here. 50% is an F, 60% is a D, 70 is a C, 80 is a B, 90 is an A, or 90 and above is an A. So we're pretty much grading it here. We're adding the percentages. So 20, 30, 40, 45%. That's pretty much what it is. Right? All right, cool. You guys understand? Ready to move on? You guys are seeing how simple it is, right? Perfect. So we understand that we just did this on the daily time frame. So now that we did this on the daily time frame, we just go and we now do it on the 4-hour time frame. So we understand we did this on the daily, we did this on the weekly. So now we go and we do it on the 4-hour time frame. We automatically already know that the 4-hour time frame, the area of interest canceled out because we don't use a 4-hour area of interest. We understand that the round psychological level, it's the same shit on the daily, weekly, or 4-hour. It's the same number at the same zone. We're just zooming in on this. So that doesn't make a difference. So this isn't valid for it. So all we can have, and then we're obviously not reject. I mean, no, we could be rejecting from the previous structure, which we'll get into tomorrow. We can have a candlestick rejection, and then we can have it touching the EMA. So we just go down to the lower time frame, such as the 4 hour, and then we just look to add any one of these three. So just to make it in simple terms, right? I'm just going to copy this right here. So this is going to be the weekly and daily checklist. And then this is going to be the 4 hour checklist. So when you go down to the 4 hour, this is the only thing you can look at. And then when you're on the daily and the weekly, these are the only things that you can look at. If that makes sense, type 1. If it doesn't, type 2. Why isn't the round psychological level valid on the 4 hour? Because it's the same thing. It's the same line just on the 4 hour. Like if you mark off the round psychological level, like you're not going to have a round psychological level on the weekly, on the daily, and on the 4 hour, because it's the same line. It's just on different time frames. You know, like you just can't. Like if you notice, we just put round psychological level. Right here, we're supposed to have daily, candlestick rejection, and a weekly or so on, but it's the same level. Bro, you're extremely patient with teaching. I mean, yeah, like I do my best, right? I want to answer all the questions. I want to make sure all you guys understand everything. I understand there's people that might not have the same understanding, so I make everything as best as I can. So as of right now, do you guys have any questions? Do you guys understand everything? Clear, perfect, super clean, perfect. All right, so let's do this. We're gonna take this same method right here. Where'd it go? All right, we're going to take this same thing right here, right? Because this is our checklist. So we're going to come here to USD JPY, right? Let's just pretend we didn't get stopped out, right? So this is where we're going to come here. We're understanding that the weekly is bearish, daily is bullish, and 4 hours bullish. So are we looking for an area of interest on the weekly to buy? Type 1 if yes, type 2 if no. Okay, I tricked you guys. I got you. I literally uppercutted the shit out of you guys right now. So if we're looking, what time frames do these say right here? Bullish, right? So we have 2 time frames in sync, meaning we're looking to buy. We could only buy because we have the 2 time frames bullish. So we cannot look for an area of interest on the weekly because the weekly is bearish. So we are only looking for an area of interest on the daily time frame. If that makes sense, type 1. If it doesn't, type 2. Perfect. Right? So we understand here, this is confluence 1. And then we move on to confluence 2, right? So for confluence 2, we then have the area of interest. Are we at an area of interest? Clearly. So we are at daily area of interest. So we are at our daily area of interest. So now this is where the rest of the strategy and the confluences come in. If you guys understand everything to this point, type 1. If you guys don't, type 2. Watch, you guys are about to trip out. Like I'm telling you, look how easy this shit is. Once you have this and the understanding of everything, you're good, right? So area of interest, do we have it? Yes. Are we touching the daily EMA? Type 1 if yes, type 2 if no. Exactly. So we are touching the daily EMA. We are having the wicks. The wicks count when it comes to rejecting the EMA. Ideally, you would want the bodies, but we are nonetheless touching the EMA, right? We are respecting it. Do we have a candlestick rejection from the area of interest? Type 1 if yes, type 2 if no. Clearly, we do have a candlestick rejection. We have a bullish engulfing morning star formation. Do we have a rejection from the previous structure points? Type 1 if yes, type 2 if no. You don't know if that's the previous structure point? Well, let's figure it out. You just draw out the market structure and then you bring it over here to the right. Is that the previous market structure? Yes. So we have the previous market structure point rejection. And do we have a round psychological level? I don't know. So we put the line inside the middle. We look for every 500. And we have right smack in the middle, 134, 500. So if you notice, everything checked off for our daily confluences. So we come here, we add it, 3, we have touching EMA, daily EMA. You guys got to make sure you add the time. We have daily candlestick rejection. We got rejection from previous daily structure points. Don't mind my spelling. Rejection previous daily structure point, and then we have round psych level. You guys are seeing how beautiful this is looking so far, right? So if we were to add everything up, this were to be 20%, this were to be 10%, this were to be 5%, this were to be 10%, this were to be 10%, and then this were to be 5%. So with everything we have right now, this would be a total of 20, 30, 35, 45, 55, 65%. 65% is still a D, but we are still missing our 4-hour checklist. If you guys are with me so far on just this, type 1. You guys don't, type 2. You guys are seeing why I took this trade, right? You guys are seeing how everything is there. Literally everything is checking off. Can you show again why it got rejected? I don't know why it did it. Like the markets just did it, but I can show you where. This is where it did it. Okay, correct. So this is where we would go down to the 4-hour, and then in the 4-hour, we would only use these in the 4-hour. You would only use these in the 4-hour. If you guys understand type 1, if you guys don't, type 2, right? Obviously, I do this shit fast because like I've been doing this for so long. Like it's just like so repetitive for me, right? So these are our current confluences to take the trade long, right? So confluences to take the trade long. So this is it. So we take this trade. So now this is where we would go down to the 4-hour, and in the 4-hour, I don't know, this is where we start adding things up. So are we touching the EMA? We are touching it, but not how we want it. We want to have it under. We want to have it like this, because if we're buying, we want it to be under, right? So for this case, this cancels out. Do we have a candlestick rejection? At the time when I took the trade, it did have it. So let's just count this as yes. And are we rejecting previous structure points? So I think at the time when I took it, let me see. Yeah, we never got a rejection from this previous structure point because this would be the previous structure point. So this cancels out, right? So all we would have is candlestick rejection as our next confluence. So candlestick rejection, this would be added as a 10%. So with that alone, that brings this trade up to a 75% with a C. So now only thing we are missing right now is my actual strategy, like, which is what I'm gonna teach you guys tomorrow. Like everything I tell you guys right now is not the strategy. Like it's just building up to the point of the strategy. Is it 20, 30, 35, 45, 55, 65, 75? Am I doing something wrong? 20, 30, 35, 45, 55, 60, 70. Okay, you guys are right. My bad. Still a C. We're still barely passing. You know what I mean? But yeah, you guys are right. It is 70%. So yeah, everything to this point right now is not my strategy. Everything to this point is just the understanding, we're lining up to the strategy. But you guys are seeing how with this alone, it just makes sense to take this trade, right? The goal of everything so you took it with a 70%? No, because everything in here is where my strategy aligned. And that's what, I think it gave me almost like a 90%. This trade gave me like an 80, 90%. And it's still his stop loss. Like it is what it is. Like you can have 100% trade, but it's never going to be guaranteed. Like it is what it is. And that's where the trade got me. But I did add my, like the rest of my strategy. But you guys see how I couldn't have possibly taught you my strategy without doing the first thing first, the second thing second, and then everything else so on, right? Do you guys understand everything so far? Type 1. If not, type 2. The trade looks like almost everything in your favor, and it shows that losses are part of the game. Bro, you can have 120% that the trade is going to go up. That shit can still hit your stop loss. Like it doesn't mean anything. It's just building an edge. We're just making it make more sense to go to the upside, to the downside. Like this is what I tell everybody. All we're doing right now with building this out is you show this to your grandpa, to your neighbor, to somebody that has no idea what Forex is. You show them like, hey, look, bro, I think this is a great investment because of 1, 2, 3, 4, 5, 6. He's like, bro, fuck yeah, bro. I'll take that shit with you. That is the point, bro. You get me? The point is you're building confluences so you take the trade and it makes sense. Because if you don't have this and you just say, yeah, I'm going to buy right now, they're going to ask you, well, why? Well, just because I think so. You know what I mean? Like that's not how it works. If you have a series of reasons on why to buy it, you're going to over time have a profitable strategy. That is just the simplicity of it because you have an edge. This is you are building your edge. But majority of you guys have been taking trades like this with nothing. And that's, you know, what do you expect? Like, come on, let's be realistic. Like if I'm putting this into the trade and I'm still losing, imagine you guys not putting this into the trade. Like you're gonna lose 100%, like no doubt in my mind. So obviously this over time, over a period of trades is gonna make more sense. So you guys understand everything to this point right now? Type 1 if yes, type 2 if no. I want to make sure you guys understand. Yes, GD, yes. Fire. This is what I'm going to tell you guys right now. What I have showed you guys right now, it has taken me 5 years to obviously like build it out, but it's taken me 2 years to explain it. The first time I ever explained it, it took me about a week to just explain the market structure part of it, just what I taught you guys yesterday. And what I taught you guys today, it took me a whole month. That's why I did like a 30-day boot camp like a year and a half ago, because I didn't know how to like transfer it from like here to like there. You know what? I just knew it. I just knew what I'm doing because I've been doing it and I just see it. But putting it from like here to the screen and putting it from the screen to your brain, it was very difficult. So it took me a lot of time. So I know it might seem very simple right now and it might seem like, wow, like that's really it. Yes, we found Waldo, of course, right? He's right there, but you got to understand how to find him again on your own. You can't need me to do it. So the only way for you to understand how we just found Waldo is that you need to watch this recording a minimum of 2 times, a minimum, because it's not logical that I've put thousands of hours, like no cap. If you think about it, let's say I put 4 hours a day into the markets for 5 days a week for 5 years. Like I have nearly 1,000, 2,000 hours into the markets. I've put all of those thousands of hours into one Zoom call. So you kind of have to catch up to me. You kind of have to catch up to my chart time. You have to catch up to what I've seen, the patterns, how many times I've seen it. And the closest and the fastest way you can do it is by just watching this recording. You watch this recording multiple times and it's going to get to the point where like, all right, bro, I get it. It's like annoying, right? But that's the point. Like it's supposed to be annoying. Like how I'm explaining to you guys, like, dude, like I do this so fast that it's like secondhand nature to me. So I would say that that is probably the most valuable thing you guys can get from today's call, other than obviously everything that I taught you. But without you watching the recording, it's not going to click. It's just not going to happen because the chart time isn't there. Does that make sense? Like type 1 if yes, type 2 if no. Perfect. Fire. All right. So we're good.